Morning.
BOE Governor Bailey. It is clear that the balance of distribution today was to cut rates. Oil steadies on potential Trump-Putin meeting in coming days. Pound jumps after Bank of England rate decision.
BOE Governor Bailey. Pay growth has come in lower than what we thought it would be.
Co C40 remains. Firmly up, ArcelorMittal rises over 7%.
Athena price forecast. E&A bullish case returns as open interest climbs back to $1 billion.
Bailey speech. Risks are quite real on both inflation and growth. Mexico core inflation registered at 0.31% above expectations, 0.3% in July.
Mexico 12-month inflation registered at 3.51%, below expectations, 3.33% in July. Mexico headline inflation below expectations, 0.28% in July, actual 0.27%. All right, how you doing? Guten Morgen. So one of the things we were looking at this morning, and I suppose we'll continue to do now, obviously the pound. Yeah. But this one in particular, the new mobile service sent a real-time email alert like 6 hours ago to get long this, and then another one like 12 minutes ago. And we were just looking at that, and we're already hitting targets. So it's the new mobile service. Nice, right? And so it says this. 70.53% chance of 36 pips. And then it shows you the patterns. Right? And so what it's doing is looking for multiple patterns on multiple time frames on the same asset in the same direction. And then says, hey, did you see that this one has 3 reasons why it should go up right now based on technical analysis? And it sends it to you in real time. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So what's going on? That's what's going on. Nothing's right, I'm torn. Yeah, ring light. Well, it's necessary. Right, Derek? It's necessary. A male model like myself. All right, so let's get our global macro on. So, how does the market feel? I want to show you instead of the typical. Now, you know what? I'll show you both. The typical place we start is the fundamental dashboard. And then I'll show you something even more interesting. So here's our hit list. These things, right, have been doing well. These things have been doing weak. Now, but we know today, right this second, pound is strong, pound is strong, pound is strong. Okay, fine. Because this is long-term macroeconomic analysis. Okay. And then this is what's going on right now. This is what's going on right now. Cool. Now check this out. Okay. There's been quite a shift in the weekly and monthly biases based on, you know, what's been happening in the S&P 500, long-term treasury, gold, dollar, yen, short-term treasuries, the options market, and volatility. We track all of that on 3 time frames, correlate them into risk on, risk off, which we explained here. And we had a dramatic shift of risk off to neutral, and now we're leaning risk on. And it seems it's probably related to the anticipated Fed cut in September. But, you know, we track all this stuff, right? And so that we know what should be and what is. Okay? This is, okay, what should be is these numbers here, and what is right now is this number, and that's how we get the scatter plot. Cool. So if you don't have stuff like this, you're being left behind. What can I tell you? Too bad, so sad. Hey, if everyone was smart money, then no one would be smart. So I guess just it's just us. So I want to turn off all the patterns except trend. Why? Because I'm the boss. And so today, when we look at gold, oil, Bitcoin, stock market, treasury market, you know, Forex, we're only going to look for trending patterns. That's that. And we're going to look for trending patterns on 5 different time frames. So there are multiple up, down, and sideways patterns. Let's say there's 3 of each. That's 9 times 5. So there's 45 different possibilities that we're looking for right now on euro dollar. And there are 2 out of 45. On the hourly and on the daily. Hourly shows vulnerability, daily shows opportunity. So when you go to your charts and do technical analysis, because this is just pattern recognition, okay, this might be the opportunity for you. It's just not happening right this second. So maybe on a higher time frame, like a 4-hour, that's the pattern you're trading. Just okay, just realize that's what's happening now. And if you're a bull, you're a little bit vulnerable, but there might be an opportunity. First one is at 1632, and the other one is around 1586. So if you're a bull, you have an opportunity to buy a dip. And it looks like it came down, hit it, and already moved. Well, too bad, so sad if you're not on the glue train. Too bad. Too bad, so sad. Bitcoin. Okay, I want Bitcoin to go up. I don't know about you, but I want Bitcoin to go up. Taking a look at trending patterns only, there's a slight bullish pattern with a break on the 60-minute. Triangle breakout, bullish. So from here, expect to pull back and buy a dip. And then here is, well, this is not ascending or descending. It's simply consolidation with the breakout. The way you trade a breakout is catch a pullback and it already took off. Boom. Well, this came out 21 hours ago. So don't get all don't get all that. Oh, Wayne, well, great, this happened, an hour ago. How come you're telling us stuff that happened an hour ago? Well, you were informed 21 hours ago. And then it broke off the bottom of the ascending triangle. You're supposed to buy it here, bro. So, like, if you didn't know, not my problem. These tools are screaming at you. But do you listen? I don't know. I sound bitchy today. I didn't sleep very much. Yeah. I'm sorry if I'm bitchy. It's been a tough morning, very glitchy. There's updates on everything. Browsers are not working properly. Windows isn't working properly. And all of a sudden I've been hit with a bunch of things that say, "Hey, do you want to upgrade your streaming software? Hey, do you want to upgrade?" No, I don't. Because if I upgrade, it doesn't work. So anyways, I apologize if I'm being bitchy. I'm sorry. Come on, bring it in. Give Papa a big. Come on. I'm a big warm gummy bear in your pocket. What do you think about treasuries? Well, I want treasuries to go up so that yields fall, and if yields fall, mortgages fall, and maybe you can buy a house. And that seems to maybe be happening on the daily, but only the daily. It looks like we may have a breach of the triangle, which is simply consolidation. And if it is a breakout, then you want to buy a dip. And you're like, Wayne, I can barely see this. Well, okay, zoom in. Okay. So we don't know what the future holds. Okay. Okay. But there are 2 places in which you could, well, 3 actually. I'm going to draw this. Okay. There are multiple places you can buy this. The thing is, this is a bullish pattern. So you can buy it on the roll reversal, you can buy it on the moving average, or you can buy it on the primary support line. And if any of that works, then this goes from consolidation pattern to a bullish. Oh, Samu, right on, man. Yeah, you've been patiently waiting, and I appreciate that. Yeah. Oh, yeah, Stevie wants to do the back tester. You bet. Yeah, let me explain. Let me explain. Let's do that. Okay. This is uh, I put the back tester there as a means of transparency. So what did TRADARS tell you on June 27th? Well, you don't know. And I don't want the ability for like any sort of system or guru to go back in time and change what happened to fit the current narrative, right? So we need transparency. And so what did I say? June 27th? Of course it doesn't go back that. Oh, what's going on here? Oh, that's the disclaimer. See, a glitchy today, man. If I can just, I have to reload it, don't I? All right. We can go back in time because I want to see June 27th, I think I said, right? So let's go back in time. Cool. On June 27th, and I just randomly grabbed that, okay? For Euro dollar, QuantBox had a, or sorry, TRADARS had a score of 10, which means we were bullish on June 27th. Now, the line shows what price did. That's the euro dollar price. And then suddenly we peaked out and the numbers started dropping to 999, 777, 666, and all of a sudden, boom. Okay, boom. Yeah. And then we popped back up and look at we popped up faster than price did. Okay. We topped out right as price was topping out. Remember, we're looking at interest rates and jobs and inflation and productivity and the technical charts and seasonality and retail sentiment and institutional sentiment, amongst other things, and then do comparative analysis. So these scores have very, very, very little to do with the price. Almost none of it. Right, Steve? It's all fundamentals. And yet they seem like crazy correlated. Our fundamentals are going up, then price went up. Then the fundamentals went down, then price went down. Then we spiked, it spiked, then it collapsed, we collapsed, then we went up, and then it went up. So sometimes it's a response. The fundamentals respond to new news and price, right? But other times we respond before price. So it's not a prediction per se. We're just doing comparative analysis of macroeconomic data. Okay? And this is just to show the past. It shows transparency. And maybe backtester is the wrong name for it. I can change the name. But this idea, like, if I were me, I would look at this and say, well, these TRADARS macroeconomic scores, so it's the scorecards, right? Do they fairly represent the direction of these assets? When we say 4, 6, 7, 9, does Euro Aussie dollar tend to go up? And it looks like it generally does. And then we drop from 9 to 5, and then the price goes neutral for a while. And then we pop up, and then price pops up. Then we drop, and it drops. And, okay? And all of a sudden, it positively impacts your belief system of, you know what, these numbers, these macroeconomic numbers, well, they seem to matter to the price. Like, it matters. Okay, sometimes the fundamentals lead and sometimes they lag, but they're not wrong. It shows the rationale of what is happening in the market and what or why what is happening in the market and why the market is behaving the way it does. Fundamentals improve, then they right, then they cooled off, improved a little bit, and then they cooled off, and then they got nasty. Okay, as we approach Canada Day, or as we hit Canada Day. No, wait, Canada Day. But anyways, whatever. Things got nasty, and then we were. Anyway, so that's a neat use of the tool. Just think of it as a training tool and a transparency tool. Okay, the score versus price, because you remember this. The score doesn't really look at the price. So the price is a reflection of the score. And the back tester is how accurate is TRADARS analyzing all those variables for understanding the potential direction of the price. And by just looking at those two assets randomly, it seems pretty gosh darn good to me. Shows you the fundamentals dictate the price and not the other way around. You guys want to do some gold? Okay, trending patterns only, up, down, or sideways patterns only, please, TRADARS. Boom. Okay, on a 4-hour chart, it is bullish. And 5 hours ago, you got a heads up on an opportunity to kick it off the moving average. Did you trade it? We also know that that's a good time of day to be trading gold. You should know that we have that data. You should know what day of the week to trade gold and what hour of the day to trade gold. And I must be bitchy because I'm like, dude, if you don't know that, you just don't know how to trade. You're like, well, Wayne, I'm really good at trading my MACD. Yeah, well, you suck at knowing when to be at your desk. Do you want to have a good noise to action ratio? You want to be mostly action and clear out all the noise? Look, there's only a 4-hour chart and a daily chart for gold. Everything else is a waste of your time. 5 hours ago, you got a heads up, but you should have been at your desk anyways, knowing that that's the best time of day to trade gold. So you're like, oh, look at that. I went bullish. I think I'll buy it. Boom. Done. You were done trading gold hours ago. Well, it's still moving up, of course. Yeah. Now, ascending on the daily is slightly bullish. And right, so long-term slightly bullish, technically. And short-term, okay, much more bullish. So what you do 5 hours ago when you got this pattern is that's just a pattern. It's just telling you, look, it's bullish right now in a 4-hour. I mean, that's that. Done. We're done. It's bullish. Are you a bull? Then drop into your chart and do some technical analysis. This is a pattern. So you're like, oh, I got a bullish pattern on a 4-hour and I'm a bull and daily agrees. So now get in on that smaller time frame on your charts and start buying dips on a 15-minute or a 5-minute. Get out there. Get in the game. That's how you should be using this. If you're a bear, you better, right? You better protect yourself, bears, because this looks bullish. The patterns say up. It's cool tools, huh? Yeah, it's very cool. Again, I'm sorry if I'm being bitchy today. I don't know. It is what it is. I'm sorry. I'm a nice guy. Okay. So what do we think about the S&P 500? Well, I'm a bull, so I can buy a dip. See, it's an up channel with a threat. So what's the opportunity then? Well, let's do some basic technical analysis. basic stuff. Okay, you need to know how to trade. Simple, simple, simple. Okay, you got roll reversal. You have primary support. And you got the moving average. So you have plan A and plan B. So it's either going to go up here or it's going to go up here. If you don't think it's going to do either of those, guess what? You're not a bull. Only a bull would think this way. If you're a bear and you're like, oh my gosh, it hit the psych level, it's going to drop like a ton of bricks. Yeah, well, don't sell it here. See, this is important to bears too. What should a bear do? Well, if I was a bear, I would look for something like this. So later today or tomorrow, so this is plan A for bulls, plan B for bulls, and this is, okay, let's say a double top is plan A for bears, and the other one is lower low, lower high, plan B for bears. You got it? So you should be able to know that right away. A bear will sell here or a bear will sell here. I hope you know that. See, there are two things a bear would do. That's one. That's two. So what are the two things a bull would do? Okay, buy here or buy here. That's it. If you're doing something else, I don't know what you do. I don't know what you do. And this should all be predefined. Do you want to buy the stock market or not? You're like, I don't know. I'm waiting for MACD. I'm waiting for the oscillator. What? Really? What are you waiting for again? Oh, I want 9 levels of confirmation. Oh, you want to buy it high at resistance, huh? Well, good luck with that. You're supposed to buy a dip. See, you should not be logging in every day trying to figure out what to do. That is the big, big mistake. In fact, it's a sin. So you should be 100% ready to go if you're a bull. And not only do you understand the opportunity, you understand the threat. You're like, but Wayne, it's got a down arrow, which is perfect for a bull. Here. But if we're down here, see, like, look, if I'm a bull, I buy this, but I don't buy that. Simple trading, man. Simple. But you have to know that it exists here and here. So if I bought this dip, okay, right? If I bought this dip around 63.76-ish, I'm probably going to be long for a while. Like a long while, huh? 66.87. Maybe even more. Maybe I buy a dip and I never get out. And I'm serious about that. I held my Apple shares for 30 years. I bought them at $6 a share and sold them at over, I think because they split, I think I sold them for, I'm going to guess, $3,000 a share. I paid $6 and I sold them for $3,000. Oh, I'm willing to hold things for decades. Yeah. So I'm quite serious about maybe I buy this and I hold on to it uh, till I die. And then the assets are transferred to my charity. Yeah. Cool, right? I know. So that's that. I think we're done. Let's get a headline update and then we'll call it a day. Euro US dollar price. Forecast corrective slide. Additional declines unlikely.
Commerce Sec. Lutnick. U.S. likely to extend China deadline by 90 days. Cyprus consumer prices fall 0.9%.
U.S. labor productivity surges 2% in second quarter.
U.S. initial jobless claims rose to 226K last week.
Oil prices rise on U.S. demand. Global supply picture eyed.
United States unit labor costs above expectations, 1.5% in 2Q, actual, 1.6%. United States continuing jobless claims climbed from previous 1.946 months to 1.974 months in July 25th. United States initial jobless claims above forecasts 221K. In August 1st, actual 226K.
United States initial jobless claims 4-week average 228.75K. August words versus previous 221K. So look at that. You're getting unit labor costs, aka wages. You're getting the headline claim. You're getting the total annual. You're getting the 4-week average. This is all while you're trading. You never have to take your eyes off the charts. You could just have this running in the background. By the way, 36 seconds until. Okay, UK CPI, 1 hour away from IVPMI. That's a big Canadian deal. Yeah, yeah, that's a big deal. So that's cool. This is a really cool tool. I got some big plans for this, right? I got some big plans for this. So I hope you fall in love with it. I hope you use it. It's cost me a lot of money, actually. It's very expensive. Wait for it. Wait for it. Is it going to be higher or lower than 3.3? Wait for it. This is real time. So there's no, well, you probably have a lag on YouTube. It's taken a while. It still hasn't come out. We're waiting on the UK. Come on, UK. Wow. This is actually crazy slow today. Unless my browser's glitching again. I don't think it's me, though. There it is, 3.2. Holy smokes, that took a long time. But that wasn't us. I think it was the actual release of the data. 3.2 versus 3.3. Inflation dropped slightly in relatively, but is absolutely too high still. Okay. Inflation is high, but not getting worse. IVP, am I next on deck? And it tends to be a market mover, I think, on CAD. I shouldn't be thinking out loud. I should be analyzing it. IVPMI, yeah, certainly in 58 minutes and 20 seconds, definitely is a market mover. But don't trade CAD, and don't trade it if it's less than expected. Wait, what? Say that again. If it's less than consensus, if it's less than 55, don't trade IVPMI volatility. Why? Well, because it doesn't populate here, it's telling us there's either no volatility in that situation, which is unlikely. What's more likely is there is volatility in situations where IVPMI is less than expected. But having looked at many situations in which Canadian IVPMI is less than expected, there's no reliable, repeatable pattern. You think that's good to know? That it could go up, down, or sideways, and there's no quantitative way to tell you what is likely. So the whole thing is a crapshoot. It'll be based on nothing but luck. Well, that doesn't sound good to me. But what if in scenarios IVPMI comes out greater than expected? Oh, there seems to be a pattern, but not on the Canadian dollar. Well, hell's bells. You would think it'd be Canadian dollar. Yes, but maybe, well, what it shows is that it's either there's no volatility or there's no reliable, repeatable pattern. What? So, what do we know in the one situation in which IVPMI comes out greater than expected? US dollar strengthens, US dollar strengthens, US dollar strengthens, US dollar strengthens. So let's take a look. So there's the trade plan coming up in a couple of hours. So how do we get this 75% chance the 2-hour trend will be down? Well, back in June, IVPMI came out and we dropped and closed lower. In March, it dropped and closed lower. In October 2024, okay, the news is here, not this. It had already dropped, but then we waited for the news, and then it continued to drop and close lower. You see? So it seemed, and those are only on the situations where the actual is greater. See, positive differential, positive differential, positive differential, so on and so forth. Yeah. Now, not all of them fell, but those are ones that fell. 25% of them, like this one, was a massive beat, but it went up. Okay. Well, yeah, that's one of the outliers. So 75% of the time down was likely. So anyway, so that's another amazing tool that TRADARS has to show you real-time probabilities based on past performance. Now, it's not a prediction of future results. It's just very clearly showing you what's happened in the past so you understand correlations, for example. Now, let me share one other thing. These are not static charts. Okay, this shows you what happened 2 hours before and after the July, 2 hours before and after the June, 2 hours before and after the March. So for every one of these events, we have the price and time data for every news event on every major pair, and then look for patterns on every single one, and then correlate those patterns with the projected consensus outcome versus beat, miss, or hit. And we have all this stored in our databases for everything. What? Yeah. So British GDP, look at this. Less than, greater than, equal, and we have every table 2 hours before and after on this asset for going back over a year. Do you understand? Just this one tool has every candlestick 2.5. I mean, look, it's hundreds of thousands just to do that. Just this, what we're looking at. But then you're like, well, but then it's only populating this. So we have to look at everything on the calendar because there's more that doesn't show, because we have to analyze, does the news event even have volatility? So we might analyze a ton of other news things that are on your calendar. We analyze them and they're like, it doesn't produce any volatility. So we've done the calculations. We have all the candlestick data and they don't produce volatility. So we don't put it on the calendar. It's not worth your time. It's a distraction. It's noise. We're not interested in noise. We're interested in action. So these things are actionable and the other ones are not. So over the next couple of weeks, what is this? 15 news events? Yeah, but there's probably 150 news events that are not worth your time. They're a waste of your time. And therefore we delete them and remove them. They don't belong on the calendar. So these are the ones that you should, are you going to trade the RBA interest rate decision? Put it on your calendar. Set some alarms. You see? Like, my goodness. This is so amazing. Yeah. So, hey, look, sign up. Go to traders.com, sign up. I don't know why you would not do it. You need, but anyways, let's move on.com. Let me go to training. Let's check the schedule for the rest of the day. Today I'm doing swing trading at 4 with David Bigler. I thought I fixed that. Hey, David, you're on. No, I'll do it. I'll do it. I'll do it. I'm canceling tomorrow's stream at FX Street. I'm not going to be around tomorrow. Right? I got male stripper camp. Yeah. Yeah, I'm a coach. Yeah. I'm just a gigolo everywhere I go. So anyways, I gotta update this. Yes, I can just do it now. But today at 4, we will be doing that where we plan out all of next week. Cool. Yeah. So I'll see you there. Make sure you RSVP so you get the link emailed to you. Remember, everyone that has a base membership at TRADARS has access to all of this live performance coaching. Yeah. And we're working on a bunch of upgrades that are going to be released soon, I hope. But check this out. Yesterday, one of the tools I'm working on indicated there was an 80% chance the Bank of England was going to cut today, based on quantitative analysis. Not a guess, not a neural network, not AI thinking on our behalf. Just simple calculations of price. Isn't that cool? And some people were shocked today that the Bank of England cut. The other thing I should show you, just for those that are not a subscriber, I'm trying to convince you you need this, and I am already convinced you need this. But like a lot of people were surprised today about the Bank of England. So my calculations showed there was more than or about 80% chance of a cut. But if you look at our data, we already had it priced in. There's another cut coming, another cut after that, and then they're paused. We already have this. It's already plotted out. Now, here's the thing. Is this Wayne's opinion? Nope. Is this AI? Nope. Is it some other fuzzy logic guess? Has it to do with the lunar cycle or the migration paths of elephants or something? Nope, 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 nope. This comes from the Bank of England. The Bank of England. We're tapped into the Bank of England, and this is what they have projected because there's their inflation forecast. Okay. So we just got 3.3 out of these guys, right? And they expect it to drop to 3.5. They're already ahead of the curve, which increases the probability of cut even more. One would assume, but there's no assumption here. This is the dot plot equivalent for the Bank of England. This is the Bank of England's most recent prediction of where their interest rates will be. Now, if they change their opinion, which they might now, because there looks like they're about 4 or 5 months ahead of their inflation forecast, which may allow not a faster cut, but maybe I don't know. I mean, they're not going to do double cuts, right? But anyways, check this out. This is what they told us. Maybe it'll change. If it changes, you'll be updated. So like I say here, and this is really important. I want you to think about the mission. Every trade you make will be logical and intelligent. That's my wish for you. Technically, fundamentally, you're tuned into market sentiment, so you know how the market feels, you know how the market is thinking, and you know what the market is doing. Short term, long term. Okay. We're even tracking, and truly using artificial intelligence, we are tracking the emotions of the market. Yeah. I mean, so pretty cool. So you throw on some performance coaching. So I will see you at 4 p.m. Oh, and one other thing. I added something. I think I did. One that bases everything quantitatively. Cool. Here's an overview if you want to see inside. So peace on earth, may the pips be with you, may your profits be above.